Hi, Greg Dorsey here. It's Monday, May 9th at Leeb.com, Leeb.com. Well, last week it seemed that investors couldn't unload their commodity investments fast enough. Hardest hit were two of our favorites, silver and crude oil. Today they couldn't get enough of the pair, with silver jumping 5% and crude oil climbing even more. Sparking the rout last week, as you probably know by now, was the Chicago Mercantile Exchange hiking margin requirements just on speculation in silver. Of course, as we've maintained all along, silver is rising for strong fundamental reasons, not out of blind speculation. Namely, inadequate supply in the face of strong and rising industrial demand, and to a lesser degree due to demand as a store of value in the face of widespread currency debasement. Keep in mind that exchange officials can keep raising margin rates or requirements in a bid to scare away speculators in the future. And as we saw last week, in the short run, such efforts can work. They can work spectacularly. But given the fundamental need for silver, no amount of margin hikes can keep the metal down indefinitely. We can point to plenty of commodities for which there aren't futures markets or where speculators play little or no role. Think rare earths, coal, or iron ore, for example. And in those cases, the lack of speculation has done nothing to prevent powerful up moves in these commodities. Chances are we'll see a retest of the recent lows in silver. That's how these things tend to play out. But judging by the high level of volume in the past week in the iShares Silver Trust, the silver ETF, which was running 5 times greater than the daily trading volume of the previous few months, the selling has reached a point of exhaustion, or is very near a point of exhaustion. Incidentally, and from there we think we'll see a powerful up move. Incidentally, we did find the lead article in the business section of the New York Times today curious. After what has been a mere 6% correction overall in industrial commodities in what has been a 10-year bull market, the Times reporter labeled the CME's margin hike as, quote unquote, the first step towards popping a bubble in global commodity prices. Well, if that line doesn't set off contrarian alarm bells, we don't know what will. If they think commodities have a lot further to fall, they're in for a big surprise. That's all for now. Stop by again later this week. We'll have plenty more for you.